Hey guys, welcome to my channel Solid Trades. Ali here. So today's video is for those people who are already holding Tesla and need to know the future outlook of it, or who missed the boat already and now need to know what's the best price to get into or what's the best possible price to get into. Also, I will be breaking down the easiest way possible that a normal person would understand using technical analysis, the best price points to buy or best price point to sell, and how to manage risk basically, because anything could go wrong. So please, yes, Tesla is doing amazing these days, but it could go wrong anytime. So always remember that risk management is the number one key. All right, so let's get into it. Okay, so we're gonna be looking at two different charts of Tesla. One is a 30-minute, which basically break down into a smaller time frame, and one is a daily chart, which represents daily action on the Tesla. All right, so each candle represents one day, and here each candle represents 30 minutes. The first thing we're gonna do is we're gonna look at the daily chart here, and what we're seeing here is that Tesla is clearly breaking out. The reason why it happened was because of the S&P 500 and also because of a great technical analysis. This was a picture perfect trendline break setup. Okay, it broke out on the day of S&P news, came down, tested the trendline, and boom. Okay, so if you were ready at that day, the best price would be to buy around here, which is $450, which is also a whole number. Okay, now it already happened. Okay, it's passed. Now what to do next? So in order to understand that, first we need to realize or find these key levels, which is the first one here is this 465. Okay, as soon as it broke 465 here, if you look at a 30-minute, it was a double top, so this was resistance, and once it broke out, look, a huge push. Okay, and where did it go down to? Up to 505 level, which is the previous high. So this level, this is where it come to on the daily chart. So now what am I expecting for Tesla to happen? So this is a very key level, which is 504 level. What I'm expecting is to come down here at the same time. This 9 EMA, which is the 9 moving exponential average, comes up here, touches both, tests the resistance level, and also 9 EMA at the same time, acts as support. So two areas of support, which is the moving average and a daily chart, and then bounces and then goes up even higher. Now it doesn't mean that it's necessarily that's what's going to happen. Okay, so that's why we want to go into the smaller time frame, and if you look here in the 30-minute chart, it's making this trend. Okay, you see this making this trend. So as far as this trend holds, it stays inside the stall, it's going to stay and consolidate. So maybe what's probably going to happen is that it's going to come down here, test this area, which is this 465 area. Okay, and then you will see this candle. You see bought back, so it came down and boom, it got bought back and then reversed. Okay, same thing here. You see this wick candle, so anything wick means that it's getting bought up aggressively. Okay, this wick means getting bought up aggressively. So it comes down. If you see this wick, get in. Okay, because we already know there is a support here, a key support level. Okay, now it's possible that it's going to even come down here. The reason why I'm saying it's possible is because do not get freaked out if you're already holding shares. You know, if it comes back down here and you're like, oh my god, it's down so much. That's healthy for the stock as long as it stays above this key area. Okay, which is also this huge candle. So if it takes back all the candle, breaks moving averages, breaks support, then it's probably going to go down. Now most likely Tesla is going to rip up, right, because of just such a huge positive momentum in EV stocks and the huge news, but anything could happen. So you always want to make sure you have your risk. You have your risk determined. So if it does go against you, you are not caught like a deer in a headlight. Okay, because there's tons of other opportunities to make money. You don't get married to a stock. Okay, but most likely that's not going to happen. Most likely it's going to come down here, and once it breaks out of this trend, that's where it's going to rip. So if I were me, what would I be doing? What I'm going to be doing is I'm going to have some of my shares sitting here. I already have my long term, which I bought way earlier, around $400, so that's long term, but I'm talking about short term trading, day trading, or swing trading. Okay, best would be to buy, it comes back down, you put your limit orders here, get filled, you add some, maybe whatever your risk is, you add some, and if it comes down more, you add some, get your better average. Okay, if it comes up here, add more. I don't think it's going to happen here, but if it does come up here, add more. your stop loss will always stay the same. So your average will be around here, and then boom, if it rips, you're gonna have a huge upside. I don't think that's gonna happen, but I'm guessing it was gonna come somewhere around here. The moving average will catch up, and then it's gonna go. So very similar to mRNA chart. So here it is. Look at the mRNA chart. Very similar. Here's what happened. First it broke out here, okay, and boom, it ripped. Came down to the 9 moving average, and then again it's going up. Okay, so similar setup. Same thing happening here. It's coming down, so coming down a 9 moving average, okay, somewhere around here, and then once it breaks out, so let's say you added some here, and then once it breaks out, you add more to your position. That's when you add. If it comes back down, then you get out. So for reference, here's what I'm talking about. So you see here the trend line break. Okay, so let's say that it's on the rip, right? Tesla's going up, so you add some here, and you see a trend, so you add some here, add some here. Once it breaks out, you add your final position, and this is your stop loss. Okay, if it comes back down here, it's gonna go down more. Okay, because now it's already broken down and it needs to stay outside. Look how it tested this, boom, and look how amazing. Another trend line break here, right there. Okay, and boom. So once it breaks out, that's where you add, and then you put your final stop here, because you don't want it to come back down inside. Once it comes back down inside, everybody else watching this trend line break, they're gonna take a loss, and they're gonna cut their loss and gonna sell, and you're gonna get dumped on. Okay, you can always get back in again, but you want to make sure you always minimize your loss if something's not working out, or if it's not working as you thought it would be. Okay, so to wrap up this video, I'm trying to be as simple as possible. This 464 area is a good area, which I think it could, I don't know, it's going to come back all the way down just because EV sector is just so strong, but normally that's what happens. Okay, come back down. If it doesn't come back down, let's say you don't get in, the next area would be once it consolidates below this trend line and breaks, you add, then you buy. Okay, and then you stop loss if it comes back down. All right, and that's about it, guys. So let me just actually do another another summary here real quick. So I want to exactly explain. Okay, so these are the levels: 503, 463. Okay, and this is the trend. So probably will come down around this area. Then you can add some just small position, because it could come down more. You don't want to freak out, right? So small position where you can hold if it goes down longer. So you can add more, and then if you see a big rip, it means there's a strong, very strong buying pressure here. Okay, and then if it breaks out, then you add more to your position, and then your stop loss if it comes back down inside, and that's it. All right, guys, keep it simple as much as possible. Look at these areas, and that's all you care about. People, I mean, I'm looking at it outside, and it's just crazy that people are looking at numbers and this and that. Guys, doesn't matter. Alibaba is down like 20% lately. Not because they have bad numbers, just because of bad news, right? So what I'm saying is that you look at the price action, and that's where you determine if you want to stay inside or stay outside. All right, guys, take care. If you like it, please make sure you like and subscribe, and I'm going to be putting out more gem videos. Also, I have a Discord channel for free down below, so make sure you check it out. I put daily alerts and put my watch list every single day, and I alert right on time before the stock makes a move, or I see some patterns like these that are about to break out, so you can take advantage of it. All right, guys, take care. Bye.